Hi guys, welcome back to Tech Investment Diaries, episode 4. Sorry for the lack of updates in the past few months. I have been pretty busy. And today I want to talk about a little bit of expansion on the episode 3 where I talk about why I bought into Palo Alto, and in general I'll talk about some of the cyber stocks that I have, given the fact that I work in cyber and this is the circle of competence for me. So with that, I did quite a bit of adjustments compared to the last time when I was doing the episode 3. So my current investment portfolio stands at about 288,000 Singapore dollar. And so far, yeah, because of the recent up market, I am currently up by about 5%, which is probably very low compared to a lot of the investment experts, but I believe in my conviction and the stocks that I have picked, because now I have better idea of the stocks that I'm currently purchasing within my circle of competence, and I have trust in them in a slightly longer term. So with that, this is my latest portfolio. Amazon is still the majority of it because it has always been something that I deeply trust in. Maybe when I have some time later in the future, I can probably make a video about this. So currently it's standing at about $71,000, which is probably about 30 to 40% of my portfolio. And fortunately, it's up by about 35% as of yesterday. So I don't have plans to sell this yet. I will keep holding on to this for the long term. So to me, Amazon is something that I can hold for 10 years, 20 years, no problem. And you can see that my Palo Alto stake has increased. I didn't buy more. It's just the increase in the share price and stuff. So it became my second highest holding. And also because my Adobe has been doing really, really bad, and it's down by about 41%. So it dropped down to the third. Apart from that, the rest of the things, not a lot of changes. I bought into Microsoft. My Dell has been doing well. And there are a few more that I added. Zscaler, and sets, that's more on the satellite, to basically take advantage of the SpaceX IPO hype. It's just an experimental one for me. And I added ServiceNow as well, so I can share more about those if it's relevant or if there's any interest in the future. So, just revisiting the cyber-specific stocks that I talked about previously, right? So, my last video was in January, and I talked about my holdings in Palo Alto and Fortinet. So, at the time, it was slightly up. I haven't really added more stocks in both of these companies since then. So, at the time, Palo Alto was up by about 6%, and Fortinet was about 16%. So, a quick update on today's update. So, Palo Alto, because of the recent good increase, my upside has become about 39%. And sorry about the typo. For the Fortinet, as of today, I'm up by about 72%. So I will share more about why I keep the conviction and what do I think about this. And recently I also added Zscaler. So as you can see here, it's not a substantial stake, but I have plans to add more if it's going down a bit more. So just a quick recap, right? Nature of the cyber companies is usually investment heavy on R&D because the landscape is always changing and there are a lot of disruptors all the time. Both from the cyber criminals and the competitors in the market as well, right now with the AI. And it eats up the bottom line so much because compared to the other SaaS companies, it makes the net income become lower. And for me personally, high R&D expense signals that the company is continuing to innovate, which is the signs of growth. So something that I look for. So these are the three companies that I have a stake into, right? Fortinet and Palo Alto has been profitable. Zscaler still is not profitable, but I can share more about it later on. This was the initial slide that I shared in the last video on why I bought into Palo Alto. It still stands true, and I still believe in this. And I believe that I got into the stock at a good timing when the investor sentiments were not so good and the stock price dropped. They're still one of the dominant players in the category. And why I hold on to it? Still same, right? Because I believe that the drop was mainly due to the acquisitions and the general sentiment around the cyber and the AI and the tech stocks, which I think some of the worries are quite groundless. Is because maybe some of the investors are not really tech friendly, and the way that they think from a technical guy in the cyber industry, my perspective, these are not really relevant or valid concerns. So long term, I'm still positive about the company's prospect, and I'll still monitor and see the situation to adapt. It's not as high conviction as Amazon for me, but I still am pretty positive about the stock. So, a quick timeline, right? The initial part, the stock dropped because of the acquisition of CyberArk, and that was the point that I bought in. So I got in at around 172.5, and from August of last year. So from then until November, because of the good results that they released, the stock had been climbing, but after that, it kind of dived down again because of the acquisition of Chronosphere. Sorry about the typo here again. It's supposed to be Chronosphere. And the management has lowered the outlook due to some of the acquisition related costs, which actually is something that I already expected, right? Because the merger and acquisition it's not so fast for such a massive acquisition. CyberArk is one of the biggest in terms of the IEM space in the cyber industry. So I already presume that these results will come in maybe a couple of quarters later to hit the bottom line. So naturally, management lowered the outlook in the February and March. So the stock kind of dived down, and I was making quite a bit of loss at the time. But since then, they have been recovering pretty well, especially in the past 2 to 3 months. Because of a couple of reasons, right? So they have launched this new AI agent security. So they made use of the acquisition of CyberArk, the leader in the identity access management space, to launch this thing called IDERA, which is pretty well received. It's because of the requirements for identity access management in the AI agents space, with the AI agents getting more common. And there were a lot of insider buying by the CEO. The CEO has been stocking up more stocks of Palo Alto aggressively, which is always a good sign. And because of their rivals, not direct rivals, I think I talked about it before, but because of Fortinet's great results and outlook recently, it kind of lifted the whole sector as a whole as well. So Palo Alto benefited from this. And because of that, the analysts increased ratings on the stock recently. So it also contributed and snowball. The other stock, the Fortinet, right? I also bought it not too far from Palo Alto, but I didn't really share about it at the time. So firstly, for Fortinet, there was a big drop. One of the biggest, I think it's about 20-25% kind of drop around August last year. It's mainly due to the concerns after their earnings call, right? So although they beat the earnings, because of the mention about the firewall refresh cycle. So basically the concern is that they have their pipe for firewall refresh for the 2026, and it was already kind of exhausted by half by like Q2 of 2025. which make the investors think that there's not much runway anymore, and their pipe is running dry, which um, is not really a reasonable concern in my view, because um, these technologies, no matter what kind of innovations, of course they have to upgrade to get along with the AI and everything as well, but it's still a fundamental requirement in cyber that you still need all these firewalls. So even if it was not in the guidance, the refresh is still required. Of course, there's always a risk that the users might switch to competitors. So yeah, it dropped because of the disappointing guidance on the Q3, and there's also a concerns on the physical versus cloud, right? So firewalls are physical appliances, and the investors were worried that with the adoption of a cloud and everything is moving to cloud, they won't have much business anymore. But to me, it's also something that doesn't make sense, because no matter what you say about cloud and stuff, all the cloud are actually sitting inside data center somewhere physical. So you still need a lot of the physical components to actually have a cloud data center. And I'm not worried about the disruption because of the move to cloud, because physical will always be needed for the security especially. So I bought about 111 shares at about 71.22 during the drop, which I believe is a good buying opportunity. So throughout the year, the stock didn't really change much. It's increasing a little bit, decreasing a little bit. But recently, because of their recent earnings call, they kind of beat and raised the forecast by quite a bit. And they have finally proven that the hardware revenue concerns that I mentioned just now, right? The concerns on the physical versus cloud, it's not really a valid concern, because the hardware revenue has been increasing even with all these cloudifications and AI and such. So and especially in the AI side, they also released something called FortiAI Gate in collaboration with NVIDIA. So they have been doing a lot in that space as well, which is really the up and coming space, because with all these AI agents and a lot of AI things happening, cyber has to come along with it. So once the use case and then the user adoption is there, the next thing people will look at is how to securely implement this, right? So security will follow. And they have been having increased market share in both the operational technology, so it's like your power plants, water plants, and maritime and stuff like that, and in the SASE space. I can share more about SASE in a later video, but maybe not for this. You can look it up on what it means. But it's an up and coming technology in terms of the cyber protection in the cyberspace. And the best thing is they have reported to have about 1 billion plus free cash flow, and has been doing aggressive share repurchases. So which is always a good sign for the shareholders, right? And yeah, apart from those reasons, the reason why I bought into the Fortinet, even though it's not really very commonly, maybe this is not really a public kind of thing, maybe only people in the industry will know that they're pretty dominant in the mid market, and recently I can feel the increasing presence of them in enterprises and the public sector on a day-to-day basis when I'm in my day job, right? And they're pretty strong in AI security and OT security, two of the most emerging markets. A lot of the traditional vendors fail to innovate quickly enough in this space, but I see the Fortinet is moving pretty fast. And they're not only firewalls, and they have a lot of other complementary offerings like threat intelligence and a lot of other platforms that work together with the firewalls really well. So you can actually basically build your entire stack of security on the Fortinet products as well. So with the current AI boom, I consider this as a growth stock for me. And so far it has been up for 71%. So I guess this is, I hope I will continue to be right. And for now, I'll still hold on to it. I don't know how much further it will go up, but this is something I'm still monitoring. And the last one that I just added I think last week, is Zscaler. So I've been monitoring this for quite a while. Um, this the main difference between Zscaler and Fortinet and Palo Alto is that Zscaler is, unlike those two, are more of the up and coming kind of technology. Although they are already quite well established, firewalls has been around for the longest time, right? So um, they are relatively more stable and easier to forecast. Whereas for technologies like Zscalers, so basically they are the leader in an area called Secure Service Edge, which I can share a little bit more later in the next slide. But for the stock wise, I observed that from November last year to March of this year, it has been going down quite drastically. Actually, it's dropped by more than half, because of a couple of reasons, right? So they have also did an acquisition on Red Canary, which is the managed detection and response vendor, to expand their offering, which I think is a complementary strategy, which is good. And there's an industry-wide AI panic from the cloud Mythos release, which a lot of people think that now AI agents can do all the things that security vendors can do, which is not really the case. It's way more complicated than that. And of course, their GAAP losses has been widening as well, so they are still making a lot of loss, and naturally because of that, Wall Street has been downgrading them. So I also see this as a buying opportunity. So I bought 26 shares at about 151.85. I think last week, 14th of May, and yeah, I think so far this is a relatively newer conviction for me, and I don't, similarly to the other two, I'm still monitoring, and this is something that I will adapt along the way. But from the industry experience, I do see that they are growing really fast at a very scary rate, and they have been penetrating into very good accounts. So these are some of the reasons, right? They are global leader in this security services edge, which includes secure web gateways, cloud access security brokers, and zero trust network access. All of these are very critical for any cloud deployments, meaning any of the SaaS solutions or anybody who has applications on publicly accessible internet, they need this. And one of the most plus factor that I think is very promising for Zscaler is the fact that they have something called Z-Flex. It's a new pricing structure and a new innovative structure that they have introduced recently. And I think it has been paying off because there's a 65% increase in the Q2 sales compared to Q1 based on this Z-Flex. And it was introduced recently. Sorry about, again, the typo here. I have been making a lot of mistakes. Basically the way it works is that for all those people who work in technology and in the government kind of sector knows that every time there's a procurement, it's a really complicated process. There's like a lot of things to do, a lot of process to go through, and the buying cycle, especially for larger deals, can be 1 year, 2 years, because of all the administrative complexity, right? So what they did is this Z-Flex actually allows customers to buy a flexible package. So it's like you have an upfront revenue commitment and a long-term period kind of commitment from the customer. So you can buy for like 3 years of Z-Flex, and then you can use any of the modules. You can put together the different security modules that you want to use under the Z-Flex. So you don't really need to purchase separately, because previously, if let's say the customer bought the solution A of Zscaler, but let's say they release a solution B in the next year, and if the customer want to buy, they need to go through the whole procurement process again. But with Z-Flex, it's just like a credit-based retainer kind of thing that customers can just buy under this same scheme. Like they already have the Z-Flex credits, right? So they can just get a new one without going through the whole tender process again. So this actually kind of reduce the competitions and the risk that customers will go to a competitor. And it's also make it less friction for the customers to buy new things or more things from Zscaler, and they get upfront commitment from customer. It's good for the cash flow and the revenue forecast, which is really win-win-win in everything. And it is a proven model from CrowdStrike. So they have something called Falcon Flex as well, and it's already about $1.69 billion in annual recurring revenue for CrowdStrike. So it's already a proven model innovated by CrowdStrike, and Zscaler has been implementing this pretty well as well. And yeah, Zscaler has been one of the most dominant players in their category as well. So they are the global leader in this security services edge, which is getting more common everywhere in the whole world. I think a lot of the cyber guys can attest to that. So it's not really a high conviction bracket for me yet. Also, partially because of the cash burning, they're still making loss, and is kind of like a disruptive technology kind of category for me. So I will monitor the situation and I will adapt to it. So yes, that's all I have for today, and I hope this gives you some 2 cents on my thoughts around cyber stocks that I purchase. And it might not always be right. This is not investment advice at all, and I'm just sharing what I did. If it's useful for you, please remember to subscribe and like the video. Thanks.